Hello traders, welcome back. This quick demonstration is a follow-up on the cycles we have been introduced to earlier. So here what we have is SPX, and here we have is advancing and declining issues, which is basically how the net stocks are moving up and down. There are a lot of patterns here, but I'll just show you how we have simplified through these cycles. Now these cycles are just multi-time frame priced cycles. You see these are the hourlies, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, and daily time frames, all just showing how they are interacting with each other. Now these are floor trader levels. Every software has it, and this is trade session, so you can just simply get to those by adding those studies. So we are using SPX, using ADD, and we are using ES as the impacted instrument. These oscillations are multi-time frame cycles pinned to the daily. What does that really mean? Let me just draw this so it makes perfect sense. So if this is my daily, right? This is my daily behavior. I am seeing how the other time frames are coiling around it. So there's a couple of patterns which show up. Now again, we're discussing the price. We're not looking inside the bar. We're not looking at supply demand. We're not looking at any balance imbalance, T-shapes, nothing. We're just looking at pure price interaction. Simplified structures. Now what happens is when everything compresses, right? When they all compress to the same point, right? Same point. We have something going on. This is called compression. When they all separate from each other, pinned to the daily, relative to the daily, most money is made on daily charts. Big players don't go below that, 4 hours, right? So there we go. When they all separating out, you get a slingshot impact. If the trend is too strong, it will pull the daily the next day higher up. So the interaction between multiple time frame price is what is being shown here, as you see on the bottom indicator. This is what I showed you is the multi-time frame indicator oscillation, and we have control on that. This is what we have on each charts. ES, it doesn't have it, but we have it on SPX and we have it on ADD. This is your floor trader pivot, because historically you're trading daytime, show up in the New York Open, and people trade. So it doesn't tell you on the Globex phenomena, but it tells you New York to New York to New York sessions. All right. So what are we looking at? Then we have these trend bands. As you can see, this magenta is what is telling us how the things are behaving. Bullish only, or bearish. So what am I looking for? When this line gets fat, as you can see here and here on SPX, I'm looking for a big bounce in ES. You understand that, right? So the daily got bullish. You can see the green color. I got a slingshot impact happening right there. because all the other time frame came down to 4 hours, and it bounced from there. And then what happens after that? The pullback happened here, right here on magenta, which is going to be, again, we are above this is bullish, below this is bearish. So that bounce which started, it lasted for a while, the whole thing. And this stays very fat, which is describing this behavior. This is where you want to be trading, when the momentum is really bullish. All right. So this is what we are seeing, interaction of multiple prices with respect to each other, the contango, the dance of the prices on SPX. And these levels work very well if you put it not on Globex but on SPX. So, all right. Market is right now 1 o'clock. It is sloppy, but you can see here we don't know which direction they are going to flip. But there are some hints in play in this structure. You can see here, what are those things? As I told you, this is the pinning. This is the pin. Okay, this is the pin, means this is a rotational cycle. Cycles rotating across. And this guy also has some cycles rotating across itself, right? This is what I'm trying to show here. So at this point, you know, there is going to be a move in the afternoon and there is going to be a move in the morning. And where do you position yourself? The trend is flat. We are on the pivot, not in the higher float pivots either. We are not on the higher level where I'm looking for a snapback. So what do we do? Well, we have to look into these interplay of this indicator. This is purely, the bottom is purely price, nothing else, just pure price. How they are compressing in multi-time frame and how they are separating in multi-time frame, the price. This one, now it looking at this, right? This real-time price, which is 5-minute, is bouncing back from the higher time frame. It's bouncing from here, double test, right, on different time frame. And here it got fat. At the same time here on ADD, we had release of the pressure and we are expecting a snap back. Do you see this? On this same indicator, it got compression. Is expected to bounce. It went out, the pressure was released, and it came back to retest. This is doing a retest, on ADD is doing a snap. Got fat. If you're waiting for the pivot break, it happened here. Below this, get ready. And once you are there, do not get out until the fatness is gone. It was fat and kept you in the trade all the way down. This is how you make 20-30 points once or twice a day. I hope this makes sense. Now everything got back into compression. It's going to go this way or that way, we don't know. Now all the cycles have spread across down, and remember this ADD rotates plus minus 2000, right? So this is how we can see if you have been pushing down and down and down and down and down for hours and hours and hours, you know, stabilizing it, boom, expect the move on the other side. So this is how you got and this is how you can stay in the trade without looking inside the bar and doing all the other things. right? It's falling apart. Look at all this. They are all separating out from each other, falling apart, and they will compress and then they will go on the other side. And there we go. This is how you catch the entire swings and swings and swings. You got it? All right. So you are, when you are, this is fat. Everything is screaming. Long, 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 long. Look at the ES on the right side. Long, long. There we go. You're up 20 points before you know it. So this is how you trade effectively. Now this is a flat day. There's nothing going on. Nothing you can do about it. But that's how it is. So putting the entire market behind you, the pressure of the entire market behind you using ADD and SPX helps push towards a certain bias. And you can see this visually very clearly. Okay, let's pick this day. Oops. So pivot is here. This is your support S2. This is your support S3. Now at this point, now again market open here. Let's look at the entire market structure. Market open here. Which direction do I go? Looking at this structure, these times are penetrating. The lower time frame is penetrating inside the higher time frame, as you can see it visually, and they continue to do that. This indicator, you can see the multiple time frame indicator also, it flipped, everything flipped on the other side of this as well. So this is already telling me that, hey, this, because of what is going on, we are better off looking at the possible short side. Looking at here, snap back is coming. Now you see how things all come together. Just looking at nothing else, multi-dimensional price interactions. I'm not looking at anything else, just pure price and pure entire market, how SPX is behaving and how ADD is behaving. When early part of the market obviously the trend is down, this is fine, but it did not open extremely on any side. It opened as a normal range of between 500 plus minus 500, that's fine. But we have a bias from SPX to push down, and it does. Where does it go? S2 here and S1 here. This is where I stated, by putting these floor trader pivots on New York Open, you get some good help. What has happened here? Everything compressed again. This guy is still saying wait, 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 because this is fat. Let the fatness go away, the short side, and there it goes away. Here we need some penetration on the first price, which happened here, right? So this is where this dojis are telling us the direction this is going to go. But look at this, is becoming fat. This is coming out of the compression, coming off this level. This is telling us, okay, maybe we are heading back on the long side. So this is where you cannot make decision, but how the price has separated out is going to compress. It's a breathing thing. Compresses, expands, compresses. Compression, expansion, compression, expansion. This is giving us the clue where we are going. This one now start becoming same thing. It was held by this guy higher time frame, and it started becoming fat. So this was a good burst of 10 points. and comes back again, is holding now, right? Again, same thing. You have to make a decision, where are we going? Now you can see here that we are penetrating the, the active time frame on which it becomes fat is getting deeper and deeper and deeper into the higher time frames as far as the price is concerned. It is just going deeper on the other side. So what we do, we wait for this guy, right? So this is not telling us anything. I'm looking at everything compressing at the same time and then expanding and snap back. So based on this behavior, how this is going 3-4 time frames inside, and 15 we can see here, 15, 20, 35, 124, we have 5-6 time frames right here, 5, 15, 20, 30, 60, 120, 240 and daily multi-time frame. This guy is penetrating into all those levels and is holding. We are back into, we did, this was a good trade. We don't know what's going to happen here, so we have to look for evidence. This is not telling us it's compressed, it can go either direction. Only price is telling us what to do. This is not telling us anything. This is just going sideways. This is not telling us either. Everything is like almost there, right? Same place. So what happens is we have to just wait in this situation when it starts becoming fat. But the evidence is showing that we are getting deep into those higher time frames. So potentially, and it is holding above it. So if you want to take a blast on one side, let this guy become fat, break off this, boom. And you stay in the trade until, this is how you track the blast down. You're taking those blasts, blast from here to here, blast from here to here, blast from here to here. And now we are not done yet. It's 2 o'clock. Power hour is back. We are back into the pivots, balance point. So this guy became too aggressive, went all the way to the top of this price. It pushed it. So the 1 minute is, 5 minutes is pushing and pushing and pushing and pushing. After 1 hour, 1 hour will shift. If it's pushing and pushing and pushing, 15 minutes will go up. If it is pushing and pushing and pushing, 30 minutes will start going up. Right? This is how these things shift to the upside and downside. So anyway, so now we don't know where we are heading either at this point. We had this big move. Now what? Let's look at the price, the active price. Bands are still telling us going down. Again, the way we opened, and we are ranging between plus and minus 500. This is one of those that bands are going down. Obviously, we are at the 400 range. And like it's a normal rotation day. This is simply a normal rotation day. That's all is there in this section. All right. So what we do, we wait for this guy to become fat again. And it does. And we go down right there. So you may have caught this, but you may not have caught this coming down, not from this approach. Came up very fast, go down. Now you're here somewhere. What to do? Now you've seen that the price has gone down, bounced from here, rejected from here, came down 3 different higher time frame. It went on the other side of this, it's flipping on the other side. Wait for it to become fat, and there we go. Another 10 points. So you got 40 points without having to pick the ultimate top and the bottom. You don't need to. All right. Let's look at some other case studies right here. The market goes crazy in one direction. Market opened here. It's already going fat right from the day it opened. And it told us to stay short all the way here. 30 points. Tells you to stay in the trade 30 points. It just rejected all the pivots. So sideways, that's what happened here. It opened minus 200 and balance, and then it went up. Again, I told you 500, 400, 600 as a normal rotation days. And this SPX is telling us that the pressure is down, and there it is. So you got this segment from here to here, sideways. You got this segment. You're getting those segment bursts. So this segment was taken 40 to 10. Now we are in this segment. This segment was also taken later on from 10 to 0. This is how you take majority, 70%, 80% of the moves, the daily moves. And what do we expect? The cycles have expanded. They will, when we have expanded too much, everything, all the rubber bands are expanded on all the time frame, they will start snapping back. This is the compression on this. You have to watch it. Compression. But this was compression because of the pressure was way down. This is again the same thing. Pressure is still down. Now what we need to see is that the active time frame, which is 5 minutes, has to start penetrating into the levels of a higher time frames, which it does start happening here. Then it becomes fat. What's going to happen here? Look at the fat line. It takes you again 10 points. We are not trying to pick this top tick and top bottom tick to be heroes. We're trying to go with the real price, direction, and the movement, and we slice those segments where the move and the momentum is really active. And this is also telling us the same thing, right? This guy also telling us the same thing, short, short, short. When they both come together, you can just see the whole market as shown by ADD and SPX is behaving in sync. Now you know. Now what if I ask the question, where are we going? You can see this ADD and say, hey, yes, we are going down, and stay down. And there you are. $10 points. From here to here, 10 points. Now this is on ADD. How about this guy? SPX. SPX opened up here. The active price started penetrating into the lower prices, and it became fat right here. So this is where, when the market is stopped and is getting some dojis, you can cheat the direction. Boom. And there you are. 20 points. And if you do 20 points, right, this is how you do momentum trading. This is how you do effective cycle expansion, contraction, expansion, contraction, expansion, contractions. So when this is not clear, you can go to other guys, right? This is what we are using. This is compressing. Things are green. That means the bias is bullish. Everything is compressed, and it is holding on the top side of this higher time frame. Same thing is happening here. It came up. Well, this is red, but compressed. So everything is compressed. Now we have to pick the direction to blast. You cannot say that I put the top at the bottom, but there's nothing telling us. This is again, if you're looking at double top, double bottom, this is price. This is true price. You can see that double bottom, double top, right? But this could have become a huge red and gone down. We don't know that. So what we have to do is wait. So we're taking those slices which are working for us when everything is clear. So compression is there, it's moving up. Wait for it to become fat. And when it becomes fat is where the dojis are, if you have not noticed, where the market stops and balances, gives you the impression that it's going to do opposite of what you're thinking. You peek inside to the actual price behavior. Blast, right? Blast. So even in the sideways market, you still have those blasting 5, 7 points. Yeah, it feels great to pick up the top and the bottom to the precision. I mean, need something else to do that, but you got the idea. We already covered this. We already covered that. So let's go to what else is, which days are there? Let's check. I hope it makes sense. After the big expansion on the downside, right? This is how the bottoms are being formed. Like getting get too aggressively for a day or two, far from the main day, you're gonna get pulled back into it. That's the story. This is what had happened here. This is the same thing. When everything is separated out, they start going inside and supporting the high time frame. You got a fat here. What are you gonna do? Wait for the blast. So you got fat here. So at this point, you got fat. Let it go up, come down. Doji is coming. So at these balance points of dojis when market is resting, it is telling you where it is going next, and there you go. So there, I think this is how you can expect the behavior of change of behavior. Now, one more thing you can see on ADD when the market just reacts something early morning before 12 o'clock, they make some extreme high and low. Usually they will reverse it unless there's some agenda they're going after. So this is one thing again that comes with a lot of experience and practice. Again, everything was spreading out on the top side, came down, compressed early part before noon New York time. They have this plus minus 1,000. Usually that is the bottom or the top for the day. And let's see if that is the truth or not. There we go. That was the ultimate bottom for the entire day. See that? So these patterns exist. You have to make a lot of observations. You have to understand how the time has expanded, how the market opened relative to what has happened to the multiple time frames, and you hold it in your mind, these patterns. Now sometimes this could be extreme open. See, this opened in balance, went to the extreme before noon, and it took off, then made a bottom. We saw this compression. We saw times have been expanding on SPX for a while, and this is becoming green later on a little bit, but this one put the bottom before noon at this level, 1,000 or lower. If it goes down to 2,000 right at the open, it could be just a down day all day. Okay, so these are patterns you need to understand. Here, most likely, what happened here? Market opened in balance, went up to our normal level, and that it is not plus 1,200 or 1,200, sorry, or something else, but this is the beginning. If you look at this a little bit, right? You should, where we are coming, market has been going sideways, 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 right? This is just, it's a chop. You can see on the top, chop, chop for 2 days. The chop is going on for 2-3 days. Expansion is coming. Market, if wanted to go long, it could have opened to 1,000 or 2,000 and stays there all day. Goes like this, goes up here, doesn't make a new higher high. By 10 o'clock, by 11 o'clock, this again patterns. As space is moving down, what does it tell you? This is going to be the day's top. And it does. So you have to make lots of observations like these, back test it. Now this time market opened extremely bullish. What does that tell you? Market open here with all 2000 stocks open bullish around roughly at resistance, which is fine. So what can happen? Two things can happen, right? Either it will reverse, or if there was a news based event when everything became super bullish, it's going to stay and become initiative and they'll never pull back down. And this is where the difficulty comes when you want to see this is going to be a reversal day or a bearish day, but these swings will make the tops and the bottoms for that day. Let's move it here, this one. Market opened. Let's see, let's open the market. Not open yet. I'm giving you some ideas to work on. You have to do some effort. Indicators are great, but not. These are the fundamentals of understanding. So, as I told you, the two things can happen. Market stay there. I will show you one example where it goes and jams and market is just jamming in one way. When they are, what is happening in the specialist mind? Why he opened everything on the top? Overnight jumps of 1700 stocks. He is expecting some selling pressure. So he's synthetically opening the price up for all the stocks, so he doesn't have to take a hit. And that was the top of the market for that day. And boom. Okay, so now I want to show you something. So right, so one pattern is open extremely high, extremely low, and it reverses. That will put the high and the low for the day. Or before noon, if it open in balance between like a 0, 300, 400, it goes extremely before noon, plus minus 1200. That could be a top and bottom of the day. I want to show you another pattern. Now here, where everything is expanded all the time, right? It's already expanded. What happened to the SPX? It became, again, it gave you some segment. It gives you this blast segment right here. Boom, fat, left bottom. Understanding the fundamentals of ticks and ADDs is important. What happened here? Market opened. Again, it opened normal across 0, plus minus 500, nothing else, nothing extreme. So they are not, the specialists are not worried about it. You let the normal course take place. So it went up, came down, just rotation. Simple rotations are going on, right? Rotation up, rotation down from these levels, and we can just take some slices of that. And slice for that is, now let's look at on the left side. For few days, market was compression and then it went up bullish, 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 bullish few days, right? And after 2-3 days, as I said, expect some reversal. And this is telling us that the smaller time frames are now getting and resting inside the higher time frames. Now I'm looking and I'm cautious about, after a few days, finding how this entire stock market is opening and where they're making the highs and lows. And I'm cautious because market has been bullish for 3-4 days. I'm expecting something to spook it to the downside for at least pullback. So what evidence do I have? Market open in balance, 400, 500, goes to 1000 early morning before 12 o'clock. 1000, 1200, it doesn't matter. What happens? Makes the top for that day. And then you can also see they just gave you the pressure here. And this is how we have to see what's really going on, how the entire market is behaving. So we saw this opening, making it not being able to make much more new highs after 10 or 11 o'clock. That puts a high for the day. How about this day? Let's see what happens. Market opened. Now this is a good one. I showed you before noon. I need to make this maybe I don't move enough. Okay. This is what I was explaining. So the two things can happen, right? Excuse me. You open at the extreme. I showed you extremely open, and that was the high for the day. We extremely opened at the low, 1200. We also showed you we opened a normal range, went to 1200, there was the low for the entire day. This is another case where we opened extremely bearish and we stayed bearish. I was mentioning that you stay bullish. When you open extremely bullish, you stay bullish. We open bearish and you stay bearish. How you are opening? If you're opening under normal, close to the pivots, PP, float area pivots, right? You have a normal rotation day. So at 10 o'clock, 11 o'clock, it will go up, but 10 o'clock, 11 o'clock, it's going to go down. It will make the high and low for the day at that time. Other option is, that's a simple no rotation days. 70% of the time, that will happen. Extreme case second is, when you open at the extreme high, this is one of the rotation that I told you about. Open normally, go up, make the high, right? Now, extreme open can happen because market maker is he's expecting a lot of selling pressure in the market across the stocks. He will open them higher so he doesn't take a loss, and that will put the extreme high open can be the top of the day. Got it? When he cannot control that either, what happens? Market opens low, or you will say, oh, it's opened low. Just like I saw previously, it opened extremely high and there was a top. This should be the low. And unfortunately, what happened? This was the high. Now you see, this is where the challenge is to understand now why they are behaving differently. So there are three patterns, right? We talked about open between 400, 500 range on top side, bottom side, or in the center. It goes up or down to 1000 plus or minus 1000 somewhere, and then it rotates. That is the high and day for the day. Or it just goes in the middle. It goes up 600, 700 up and down rotation days. It gives you highs and lows for the day. Sometimes you can get pick days high and low. Other third case we talked about is you open at the extreme, and that extreme makes the high and low of the day. Extreme high open up makes the high of the day. Extreme low open makes the low of the day. It can happen at the open itself, or it can happen before 11 o'clock, where we open normally and we go down plus minus 1200. This is a third case where I told you it is a one-sided day. This is that day. One-sided day. Got it? So these are the only patterns. So these cycles are going to help you identify a few things. So it opened here and it was just extreme open. SPX was opening below the balance. It was just bearish all day. Not super bearish, but did the opposite of what you thought. So this is how they rotate things differently. And fundamentals is where you need to understand what is going on, right? Some news is coming, and then they have been an up and down day for a while. What's going on? These are the normal rotation days, right? So what are we expecting here? Market open normally. It's going to go to plus minus. So here it went to open normally, went to 1000 up. That was the normal before 11 o'clock, plus minus 1000. Made the days high and low right there. You can see on the right side. Compression is there. That's fine. Let this cool off. It did eventually. This is telling us ADD higher pressure is, that was a day high. So the opening of the entire market using the floor trader pivot, and there are 4 behaviors you can expect. That's all there is. Usually rotation day, open in balance, go to plus minus 1000 within the next 90 minutes. That will be high and day of the low of the day, sorry, high or low of the day. Or first case is going to get you both highs and low of the day. The third case is open extreme plus minus 1500 or 2000, and that puts the high or low of the day. Extreme plus 2000 may be high of the day, minus 2000 may be low of the day. The fourth case is where it is challenging, is where in the market profile term we call it day becomes initiative. It opens extremely low and it stays low all day. It's open extremely high, it stays high all day. That is all there is you can do with ADD. I've explained it as much I can. Here's the example. Right? Look at this. Cycles, look at SPX open very extremely. Cycles are holding, and now it becomes fat. And there it is at the open. Normal, right? That's normal. Plus minus 400 is normal. XPS is telling us it's going to go long. This was the day's low. That's normal expectation. Okay, let's do more. This is one example we talked about. The market is probably waiting for some news. It opened up extremely high, 1500, 2000, and what happened? It put on the day's high. It did not have too much rotation that day, only 20 points, but it put the high of that day. Okay, that's one pattern. There's nothing else you can do with these patterns. It opened at 1500. Again, it puts the somehow it puts the top here. That's a big news day, most likely. That's what happened. So it was here. I think it went on both sides. So it came down very aggressively, and when it happened before 11 o'clock, right? So 11 o'clock. This was a very huge bar, so I think there's some news happening here. But again, it opened up high, went from plus 1500 to minus 1000. But minus 1000 happened when? Before noon. Put the bottom of the day right there. And this guy was fat, came back, held it, bounced from there. Right? So that is, I know it's a little bit challenging to think this way, understand the entire market, understand how things are behaving. Now we are not even dealing with intermarket analysis, simple, straightforward analysis. This day, market open here, normal, went to minus normal to plus normal. It opened here, right? Plus minus 500, went to again where? Boom, nowhere. This is normal rotation of stocks. 500 stocks went up, net positive. Now look at the SPX on the left side, leftmost chart. This is where the blaster came into picture, right? So, this is how you make big bucks, understanding big things. Market has been going, now the cycles, right? Let's look at the cycles. Market has been rotating, compression, expansion, compression is coming. Next day it comes, boom. That means it's expanding, is breathing up, breathing down, breathing up, rotating. 2 days sideways, 2 days up and down, 2 days up. This is how you can see those patterns. All right, I think we have spent enough time. Let's just do one last one. on ADD. Just wanted to give you that 4 pattern space here. Remember, you're serving this blog for greater good. Where are we? We opened here. Normal range. Nothing extreme. So 90% of the time, not 90, sorry, 70% of the time, market is going to rotate. Here it went to resistance 1. Cycles. Went up, right here, bullish. You were bullish initially, and then it opened up. ADD was there and there and hanging because it's hanging because of this. So now it's giving us the hint on this side. The entire market is tipping over. Makes the top and ES. This is normal rotation day. That means I can most likely pick tops and bottoms. This was the top. And again, the pattern shows up again. Now this is a little bit late. This is like almost noon. At noon, it makes 1200 points. 1200 minus 1200 value. So minus 1200 things were heading down. There we go. Made the bottom of that day. So this is how you can pick the tops and bottom ranges using the entire raw data. Not even have to look into ES. We can just see this and see the behavior. You can just see this behavior, right? This is, I think I've shown you this multiple times, but I never explained it that clearly, but I think you guys are ready for it now. What happens here? It opened plus 1000 before 12. Look at the SPX. All the time frames are going down. So this most likely is going to the top. And there it is. It was. I hope you see this magic. This day, market opened extremely low. I told you that. It can most likely market opens early, extreme higher. Market makers are expecting a long pressure, so they will open low, and so the people can buy the dip. So he doesn't have to use his inventory. So he opens lower to motivate people. Maybe some he's just trying to generate some value emotionally, so people can see it and act accordingly. SPX became fat. Boom. Day is low. SPX supported it. All right, here let's do finish last one and be done. Market opened here. SPX is going down, down and down, and it is holding now. So that market opened here at minus 1000. What are we expecting before noon? If it was 2500 plus minus or 2000 plus minus, it could become initiative day 2. This is where again the probabilities of 70% rotation that you're able to pick the highs and lows is there. And 30% of the time you will get in trouble because of it can open in certain way and can stay in that state rest of the day. Initiative 3-4 times a month this happens. So there we go. SPX went down to R1. This guy is compressed. This guy is telling us how it opened. Should be plus minus 500 normal range. It went to minus 1000 at the open. So this could have triggered a downward emotional setback for people. There are 2 probabilities. Before noon, plus minus 1200. Expect a rotation on the other side and expect to be the market tops and bottom be picked. So be that guy who can pick up the tops and bottoms, but you understand the dynamics, what's going on. This is where we are using these. This is a center pivot. This is bottom R1, R2. This is a pivot. This is R1. Right? So then R1, R2 goes down, S1, S2 This is S1, sorry. Support is in the bottom. So SPX prices were trying to go down. It held. Cycles are not flipped on the other side of the daily on R1 minus 1000. So probability if I want to take a stake in the direction picking up that day's high and low, I will bet it on, because of the 70% probability, I'll bet it on this reversing to the mean. Okay. There's a lot other things going on as well. Now this is a good one. It opened extremely, one of those things. It extremely opened at minus 1500. Cycles were going sideways. They crushed it on the one side. SPX crushed it. Now it's bottoming in because it is entering. The smaller frames are entering into the higher time frame, then it becomes fat. That was the day's bottom. So who says that we cannot pick days highs and lows? We can. And I gave it to you for free. Free. Why? Because here at 369, we are here to help you. But you have to reach out. If you believe in the raw power of trading, that's how it is. We go lot deeper into hundreds of things, but again, you have to first understand the basics and see it. Spend some time seeing it. Flashy indicators, very flashy. Right here. Sideways, sideways, sideways. You can just see that. Sideways just bouncing. Nothing else going on. That means some big move is coming. It's coming and it's coming and it's coming. Market open, went down aggressively, right? From here to here. This guy told us all the times are separated. Now they are compressed. Separation on time, compression on the indicator, everything flipped on the other side, long side, at support 3, which is secondary things, but I'm just showing you the pure cycles. Compression. But I showed you the patterns of ADD. Days, top and bottom. Alright, I want to see some pattern where it failed. Let's see this one. Opened on the normal 400, 500 right here. Now it went and made a new high. Now this is a failure for our philosophy, which is I wanted to show you some failure. Cycles were compressed. They started expanding, 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 expanding. Here also it was compression for a few days, few hours at least, yesterday afternoon. That means we are expecting some move on one side or the other. Cycles flipped on the other side, went long. Okay, times are separating again and going towards the bullish separation. The current time frame is moving to the bullish side. Okay, that's fine. This also happened. Fine. Compression moving to the top side. Then they start flattening. But when we open here, we go to the rule of minus plus before noon. At 10 o'clock, it went from normal to plus minus 1200. It happened here. And we thought this is the top. Yeah, I got 10 points out of it, but it was not the top yet. And we don't know that because we played the pattern. And then it held. So it held again where it opened. And it opened very high. High means it's like above the normal range, right? So this is where we have to use the other helpers when this is not going on. We don't know that, right? So we are looking at this, how they're separating and are they resting. It has to penetrate a little bit deeper and be rejected from the higher time frames, and here it is still fat. Here it starts getting inside it. Right? This is the last Compression happened here. This is still bullish, bullish, bullish. This is where it is tipping, right? This is where it is tipping. Now, even though we got 10 points based on our simple pattern, now this happened, right? They're not done. This is where the pattern comes. By 10 o'clock, 11 o'clock rules you know about, and then if they don't, and if they make this, they don't take a low, they take out the high for the day, then we reset ourselves at 1 o'clock, 2 o'clock. What is happening? This is where it started giving us a clues that multiple time frames are getting a little bit lazy for the bullish sentiment. So we were not able to pick the ultimate high for that day. We got something, we thought it is, but we got some profits out of it, and then it went up there. It could have stayed up and up and up and up and up and up and up. We don't know that. This is giving us the hint. Compression, time frame penetrations from the lower time frames getting deeper into the higher time frame. We didn't pick the top, but we got entry here somewhere. Again, same level. Breakout, whatever you can call, any terminology you want, but this is how the overall market is behaving. And we got down big time. That's all I had to say. Watch, go back 2 years, day by day. What I explained to you, put on your pivots, which is a floor trader pivots. Make your statistics. See this behavior. Opening between this range, what happened at 10, 11 o'clock, what happened at 1, 2 o'clock, and how many times you were able to pick the day's high and low effectively, and what days you were confused, what day it became open high and never came down, what days it went down, it never came up. 4 patterns. And then you go from there. Thank you for listening. Good day.